Title: Stay away from these property loans to end your real estate struggle. Struggling in the real estate market, avoid these property loans for a smoother financial journey. 1. Adjustable rate mortgage. This type of loan often starts with low interest rates but later fluctuates, making budgeting difficult. 2. Interest-only mortgage. Though it may seem attractive at first, this type of loan only requires interest payments for a specific period, leaving the principal untouched and resulting in a larger payment later. 3. Subprime mortgage. Designed for borrowers with poor credit history. These loans come with high interest rates and may lead to foreclosure. 4. Balloon mortgage. With low initial payments. This loan requires a lump sum payment at the end, potentially causing financial strain. 5. Wraparound mortgage. These loans involve assuming the seller's existing mortgage, but they can be complicated and put both parties at risk. 6. Non-bank lenders. Be cautious about borrowing from non-bank lenders, as they often charge higher interest rates and have less regulatory oversight. 7. Home equity loan. Tapping into your home's equity may seem like a quick solution, but it increases your debt burden and could put your property at risk. To ensure a more successful real estate journey, consult with reputable financial advisors, thoroughly research loan options, and compare terms from multiple lenders. Avoiding these risky loans will help you navigate the complex world of property financing with confidence.